Emil Wolter. He's the head of Asia Regional Strategy for RBS, and he joins us from Singapore. Emil, why do you say investors are caught between denial and fear?
I base that observation on multiple meetings that I've had with investors really across the world, as well as the positioning that we get implied in the data that we receive as far as both fund flow and sort of weightings versus the benchmark are concerned. There's also a prevalent feeling, I think, that markets have already been weak. There's a bit of a fatigue with the talk about Europe, and a sense that now must be a good time to do some bottom fishing. I tend to have an issue with all of those points.
What's your biggest issue? Do you believe that markets haven't fallen far enough?
Effectively. I mean, there's a number of things that could turn one more positive, but I think the key starting point to observe here is that the trajectory of growth for the world remains very much on a downward slope. And that, I think, is going to basically continue for quite some time. You can then layer on top, of course, the financial system problems that you've been discussing all morning across Europe. And you can lay on top of that the potential implications on things like global trade and so on. Now, all of this is going to have an impact on both the short-term and the medium-term earnings environment, and that, I think, is not fully reflected in the share prices at the moment.
So Asia, obviously, is not immune to the slowdown that we're seeing in the rest of the world. We just saw China's growth slowing by the most in a couple of years. Do you think that investors are correct in their assessment of how much Asia will be impacted by the slowdown that we're seeing in the rest of the world?
We've done a fair amount of work on this particular topic, basically looking back at how global recessions have impacted share prices in Asia over the last 25 years. There's been really three major recessions that we could look towards, and typically what happens as a consequence of Asia's very cyclical composition of stock markets and also the open nature of our economies, earnings per share tend to basically halve during a global recession, and share prices tend to fall by about 40%. And so far, share prices are down by about 20%, suggesting that we've either discounted half a recession, or you could phrase it differently and say that the market is pricing in a 50% probability of a global recession as we go into 2012.
So how does this impact your strategy? Where are you buying equities, if at all, right now?
Yeah, there are, of course, opportunities, and part of the good things about recessions and crises in general is that people tend to overreact and get driven by emotions rather than sort of rational judgments. Having said that, at this juncture, my feeling is the focus should still very much be on the return of your capital as opposed to the return on your capital. There's really only one sector that fills me with utmost confidence in terms of both earning a decent return and also not taking too much risk, and that's the telecom sector, where we see a combination of growth, value, pricing power, and of course a dividend yield to boot.
All right, Emil Wolter, head of Asia Regional Strategy for RBS, thank you so much for sharing your insights with us.